Good morning, traders, and happy Labor Day. This is the weekend update for Sunday, September 1st, although I'm putting it out on Monday, Labor Day, since the markets are closed here. So, looking at our open trades, as you'll recall, I kind of reset trades, started filtering back into trades here a little over a week ago. The trades that are currently on is this particular diagonal trade. The diagonal trade was designed to take advantage of the fact that our market is right back at all-time highs. Now, it may very well punch through this next week. If it does, then that particular trade is going to need some adjusting done on it. But in the ideal world, what I'm looking for is to maybe have a little bit of a stall, a little bit of a pullback, maybe another day of decay on this, in which case I'll close this trade out in that probably 8 to 10% profit range. And that's after about 4 days in the trade. So that's kind of my goal on this one is either find a way to balance this out so it is a zero risk of loss trade, if that can be done, and then I might let it go a little bit further, or if we get this little bit of pullback and I can close this thing out in the 10% range or so, I'll be taking that path. So those are the two potential paths here. Same thing here. If we get a little bit of a pullback, this trade might start hitting that 5 to 10% range again, in which case I would look to thin or close it. There is a good till cancel order that's floating out there right now to take one of these out if it hits the particular profit target. And then I'll see about handling that second one. The goal on this one is, I shouldn't say the goal, the adjustment on this one is if we get more than 10 points above these 5610 strikes, which we are, and or negative delta, more than about a half a point negative delta, somewhere in that general range. At that point, I will adjust this, raising this right wing. So that's another possibility here tomorrow is if the market moves up here late in the day tomorrow, this will be well above our adjustment point, which is 10 points higher than these upper longs, and I'll be negative delta possibly more than the half point. And again, that's going to be an adjustment point for me. This particular trade was just put on Friday. Early in the day is when it filled, and then the market moved up significantly from there. So going into the last few minutes of the close, the market kind of took a big shot up. I mean, I think it was 30 points or more. Let me just switch this here real quickly to maybe a shorter time frame chart. Yeah, we can see here that within the past 30 or last 30 minutes of the market, we jumped up almost 40 points. So that was a pretty big move in a very short amount of time. And in theory, that trade could have been adjusted under that criteria. In other words, we are more than 10 points above those up strikes, those upper longs of 56.30. We're up here at 56.48. So almost 20 points above them, and negative delta more than a point. But this all happened within about the last, again, 15 minutes of the market, 10 minutes of the market. By the time I would have done a video and put it out, many people would not have been able to get fills on that. So since this trade has really only been open one market day, I figured it's not a big deal on this one to set and adjust it come tomorrow at this point, Tuesday. So if the market late in the day is still up in this range, we will still be negative delta, and I will be performing a very similar adjustment to this butterfly that I would end up doing on this butterfly as well. So that's kind of the game plan on the open trades. Fortinet, of course, we rolled that wheel again. So this thing is now had, I think, 4, maybe 5 rolls up of those puts. And it's up over 10% in that trade, and we've got quite a bit more decay that can happen now. We're at 1178 or 1170 in profit, and if this thing stays above that 73 or 74 mark, as we near expiration on this one, we'll be up about $1,300 in profit on this wheel trade, and have never taken possession of the stock. This is simply selling puts while we're awaiting for potential assignment. So those are the open trades at this point. I will likely look to open a new one maybe this week, possibly as I close this one out. We'll see how that goes. So looking at our markets, the SPX is very strong, continuing to be strong here, pushing right up to those all-time highs again. And we'll have to see if that punches through or not. Futures opened yesterday briefly, and when they opened late yesterday on Sunday, as they always do, even though this is holiday weekend, they were off about 7 to 8 points, somewhere in that range. Not a big deal one way or the other, but at least it was telling me at that time we weren't looking at a significant breakout, at least based on those readings. So we need to keep an eye on this, because if this does break out and we close above those prior all-time highs, I'm going to call it, well, that prior all-time high was precisely 5669.67, so call it 5670. If we close above those all-time highs, I suspect we're off to the races here again, probably with another run. You can see prior consolidation here. We broke out to all new highs, consolidated sideways a little bit, and then started another run. So that would be kind of my expectation if we do in fact get this breakout. Now, earnings season is largely over, so the news is going to slow down a little bit. I think economically, we've already baked in that there's going to be at least a quarter-point adjustment from the Fed, which I think has fueled this market in some of its recent run-up here. So I think a couple of those things are baked in. I'm not sure there's a big catalyst for a big move up from here. But we'll see. If we break out, we will continue to run. RUT. So RUT has not broken to new highs. It's looking... it's looking solid here, but it's looking like it's essentially back in a new range here. And that range is going to run from about the 2330 down here to probably in that 2100 range. So that's kind of what I'm expecting in RUT. Don't have a RUT position open right now, and that is by design. As you know, the last RUT position, the RUT acted what I would call a bit erratically at times, having a massive move like this from 2040 up to 2280 in a very short amount of time. I mean, that was just a massive, massive move for that short a time. And then a drop from 2300 down to 2000. I mean, that's over a 10% drop in a matter of a couple days. So a rally up that was almost a 4 standard deviation move when that happened, and then an equally massive down move a few weeks later. That's just not real. The behavior is a little bit erratic, so I'm kind of steering clear of RUT right at this time. And then I just want to take a quick look at the Qs. So the Qs also are not making new highs again. So we had a sell-off to what I would consider to be a pretty good point of consolidation here a week or two ago. Then a very strong rally back up here to this 485. And then a little bit of a drift back down, showing a little bit of strength here, late in the day on Friday. But we can see that in volume-wise, our down days have had some bigger volume, just a little bit, but bigger volume than the up days here. And that many times signals that down move is not necessarily over at this point. But I'm not expecting any dramatic down move. I think if we do move down, likely place for that is going to be right here around this 558 range. I think right in there, maybe even down to I said 458 range, maybe even, down here, possibly all the way to this 452 range, kind of filling this little gap in here. That would be likely normal pullback that would not indicate anything negative in the market. and then probably rallying higher from there if we get a pullback. Again, may not even get a pullback. We may just, come fill this little gap here to 463 and then potentially move higher from there. So that's kind of what I'm expecting in the Qs. If we look at VIX, we'll see that VIX is very low again. Again, this was a very unusual, massive, massive spike. I still expected more fallout after a move that big. I felt like that massive move was some people maybe knew something that the rest of us didn't, but that hasn't shown up if that was in fact the case. So we're right back down to what I would call low VIX levels in the market right now, kind of our standard range that we tend to chop around in here, which is going to be from around that 16.5, maybe even all the way down here to 12. So that's kind of that VIX reading tells me that nobody really has any fear in the market yet at this point. We've got elections that are about 2 months away. Going into elections, again, markets tend to be fairly bullish the year of an election. So that may be what's playing out here in part as well. So that kind of wraps up the weekend update. Thank you, everyone. Those of you that might be watching this on YouTube, please like and subscribe. If you're interested in following along and seeing my live trades as I make them, as I adjust them, etc., I'll put a link down below that you can click on that and take a look at the service. I price it very reasonably so that people can get in there, kind of see what's happening, how it's happening, maybe just learn from some live real-time trading. This is slow trading. This is not day trading. Usually when I put an order out there, that order might set there for an hour, 2 hours. In some cases, it might set there for a day, 2 days, 3 days. In some cases, again, these particular trades like this GTC order, I think that thing's been sitting out there for probably 4 or 5 days, just waiting until I potentially get a fill. So it's not what I would call fast-paced, and it's something that people can do while they're working, etc. So thanks so much, everyone. If you have any questions, put those in the comments down below as well. Take care.